I'm James Hart, Investment Director of Witan Investment Trust. Witan is a London-listed investment company that was established in 1909 to look after the financial interests of one family. Today we have well over 20,000 shareholders and nearly £2 billion invested on their behalf. Witan's objective is to achieve significant growth in investors' wealth by investing in global equity markets using a multi-manager approach. The idea is to provide a one-stop shop for global equity investment, where Witan and our managers collectively take the investment decisions on behalf of our shareholders. We therefore see Witan as a cornerstone for investor portfolios where individuals and their advisors are looking for growth in capital and income ahead of inflation over the long term. Well, Witan is actively managed, which means investments are selected on their individual merits, not according to their weight in a stock market index. We fundamentally believe that having this ability to be selective investors is beneficial to investors' returns in the long run, as we can invest more capital in companies that we like and avoid companies that we dislike. Hopefully, this allows us to identify attractive opportunities and avoid companies at risk of disruption or indeed extinction. Witan's portfolio consists of two primary components, core and specialist. The core portfolio, which accounts for approximately 75% of assets, is invested in large and medium-sized companies with enduring cash flows or underappreciated growth prospects. Typically, these companies are located in developed markets. The companies are selected currently by 6 different investment managers who run concentrated portfolios, but they employ different investment styles to identify a range of companies which, when combined, produces a diversified portfolio for our shareholders, so that they are not beholden to the prospects and fortunes of any one country, sector, or indeed investment style. Typically, we look to own companies for the long term, but crucially, unlike an index fund, we're able to make changes when necessary. The specialist portfolio accounts for the remaining 25%. This is typically invested in assets which are not owned by our core managers. They're companies that have a higher growth potential or might be trading at a discount to their intrinsic value because they're currently out of favour. For example, these might be investments in emerging markets, in private equity, real estate, or life sciences. This portfolio often performs quite differently from the core portfolio. Witan's board and the investment team are responsible for setting the overall strategy, with the aim being to make as few changes as possible. However, there are always risks and opportunities which evolve over time, or indeed those that appear suddenly. Therefore, we will make adjustments to the allocation where necessary. In addition to the equity portfolio, where we can move money between managers, or indeed replace one entirely, we also have additional tools at our disposal, such as gearing or the limited use of derivatives, to help adapt to short-term opportunities or manage risk. We believe that our long-term results help justify the active investment approach. Our dividend has grown every year for the last 48 years. Indeed, the dividend that we paid to shareholders in 2022 was over 3 times that paid to shareholders in 2004, which was the year that our multi-manager strategy was adopted. Over the same period, shareholders have enjoyed a share price total return of over 450%. Of course, it is crucial to remember that past performance cannot be guaranteed in future, but with patience and selectivity, we believe that an equity investment such as Witan can help deliver wealth generation over the long run.